46%. It's a massive number, right? And it actually represents the invisible engine of the modern economy. What you're looking at here is the staggering compound annual growth rate of capital expenditures by just the top 4 US hyperscalers. Now, while we all interact with the software side of artificial intelligence, the chatbots, the image generators, the predictive models, this 46%, that is the physical reality behind it. It's the concrete, the copper, and most importantly, the actual silicon being bought right now to power our future.
Welcome to The Explainer. I'm so glad you're here. Today, our mission is to really demystify the physical infrastructure that's powering this unprecedented AI revolution. We're going to look under the hood of the data center and impartially analyze the strategic playbook of a major player in this space, Marvell Technology. We're drawing directly from their deeply detailed 2025 investor event to see exactly where the billions of dollars are flowing and why the hardware actually matters just as much as the code.
Okay, let's dive into this. Here is the macro to micro roadmap we'll be following today. We'll start with the AI infrastructure boom, move into the era of custom silicon, examine a massive market expansion, zoom in on the custom XPU advantage, and finally look at Marvell's path forward. Section 1. The AI infrastructure boom. To truly grasp what's happening right now, we have to recognize that AI requires a level of physical, incredibly power-hungry infrastructure that the world has literally never seen before. Just look at the incredible growth driving this global buildout. When we look at the source data, we see that total data center capital expenditures are growing at a 51% compound annual growth rate. Right alongside that, the top 4 US hyperscalers, the true giants of the cloud, are driving a massive 46% growth rate in their own spending. We are talking about hundreds of billions of dollars being deployed in real time to build the physical foundation of the AI era. It is an absolute gold rush, but instead of pickaxes, the tools of the trade are advanced semiconductors.
Which brings us to Section 2, Era of Custom Silicon.
Because think about it, if you're spending hundreds of billions of dollars on data centers, you absolutely cannot afford to be inefficient. And this brilliantly illustrates a very specific technological evolution happening inside these facilities to support the boom. For years, the industry just relied on standard off-the-shelf x86 processors, kind of a software on x86 for everything approach. It was flexible, sure, but eventually it just couldn't keep up with the intense, specialized demands of AI. That led us to heterogeneous computing, mixing CPUs with GPUs and FPGAs. But now, we have fully entered the era of cloud-optimized silicon. Hyperscalers are demanding chips that are custom-built, almost from the atomic level up, for their specific, massive cloud workloads.
Before we look at the money involved, we really need to define a critical term you're going to see a lot today, the XPU. Simply put, an XPU is a specialized, custom processing unit. Think of custom CPUs, custom machine learning chips, or data processing units. They are fundamentally distinct from general-purpose chips because they are engineered to do very specific, highly demanding cloud and AI tasks with maximum efficiency. This right here is the fundamental building block of the modern data center.
Moving on to Section 3, a massive market expansion.
So, standard components are being ripped out and replaced by high-value bespoke hardware, and the economic ripple effect of this is absolutely staggering. According to Marvell's data center projections, their total addressable market, or TAM, was $21 billion in calendar year 2023. Fast forward just 5 years to the projection for 2028, and that market jumps to a staggering $94 billion. That is a massive multiplier in an incredibly short time frame, and it perfectly reflects the urgent global race to build out AI capacity.
But here's the crazy part. That $94 billion figure wasn't even their original guess. The 2028 estimate was actually completely revised upward by 26% from a prior $75 billion projection. Why? Because the insatiable need for infrastructure is accelerating even faster than the experts predicted. Specifically, the need for compute is 29% larger than previously thought, and the need for interconnect, which is the technology that links all these chips together, is 37% larger. So where is that $94 billion actually going by 2028? Well, accelerated custom compute is the undisputed giant here, taking up the lion's share at $55.4 billion. After that, we've got $19 billion for interconnect, $13.2 billion for switching, and $6.5 billion for storage. It's incredibly clear from the data, the engine driving this entire financial ecosystem is the custom compute hardware that's actually processing the AI models.
Section 4, the Custom XPU Advantage.
We really need to examine that massive $55.4 billion slice of the pie. What exactly are these hyperscalers buying when they spend billions on custom compute? Well, it's actually not just the main brain of the operation. You see, to make a custom XPU actually function in a massive data center, you need XPU attach. These are the crucial surrounding components. We're talking about network interfaces to move data, scale-up fabrics to connect multiple chips together, security coprocessors, and memory poolers. Think of the XPU as the engine of a supercar, and the XPU attach as the transmission, the fuel lines, and the cooling system. You literally cannot have one without the other.
Now, what's really interesting about this data is the growth dynamic happening inside that $55.4 billion compute market. Yes, the core custom XPU market is huge, projected at $40.8 billion, with a 47% growth rate. But look really closely at the custom XPU attach market. It sits at $14.6 billion, but it is growing at a blisteringly fast 90% compound annual growth rate. The supportive connective tissue of the AI data center is growing almost twice as fast as the processors themselves. And this creates a fascinating business reality for suppliers in this space. Based on the source data, only about 1/3 of the market opportunities are for those core custom XPUs. Now, those projects are massive. We're talking multi-billion-dollar lifetime revenues, but they have pretty short lifespans of just 18 to 24 months before the next generation replaces them. Meanwhile, 2/3 of the opportunities lie in the custom XPU attached components. These are smaller projects, worth several $100 million, but they offer stable, multi-year lifespans of 2 to 4 years. So it really requires suppliers to balance both those massive, fast-paced wins and the smaller, highly consistent integrations.
Which leads us to our final section, Section 5, Marvell's Path Forward.
Let's zoom in on Marvell's specific strategy to supply the picks and shovels for this data center gold rush, based completely on the facts presented in their 2025 investor update. Currently, Marvell is actively engaged in over 50 custom silicon opportunities across more than 10 different customers. Digging into their secured placements, or sockets as they're called, they've locked in 3 custom XPU sockets, a notable 9 custom XPU attached sockets, and an additional 2 custom XPU sockets specifically with emerging hyperscalers. So it's a broad pipeline that clearly targets both the massive processor opportunities and that fast-growing attached component market we just talked about. And you know, this isn't just theory. It's actively playing out right now with the biggest companies on Earth. Take this quote from Amazon Web Services. They explicitly state that building a cost and power-efficient cloud at their massive scale begins with leading-edge semiconductors. AWS directly calls out their expanded collaboration with Marvell to deploy specialized networking hardware. This is real-world proof that major hyperscalers are actively bypassing off-the-shelf parts and directly collaborating with silicon designers to build their physical infrastructure. So the crucial point is understanding what Marvell is actually aiming to achieve with all this. In calendar year 2023, their custom compute market share was less than 5% of what was then a $6.6 billion market. Fast forward, and their stated target for 2028 is to capture 20% of an exploding $55.4 billion market. That is an incredibly aggressive growth goal, attempting to secure a massive slice of the most lucrative sector in the entire AI infrastructure buildout.
And we can already see this shifting their financial reality today. In fiscal year 2025, Marvell reported $4.2 billion in data center revenue. The breakdown is super telling here. $3.7 billion came from cloud AI, while just $500 million came from traditional on-premise hardware. Their explicit stated future goal is for over 50% of this massive revenue stream to be driven by custom hardware rather than standard products. The company is basically fundamentally transforming itself to meet the bespoke needs of the AI cloud.
Which leaves us with a critical thought to ponder. We've traced the incredible rise of the physical infrastructure that makes artificial intelligence possible. We've seen exactly how standard chips have given way to bespoke, cloud-optimized silicon, creating literally billion-dollar markets overnight. So as AI models grow exponentially smarter and hungrier by the day, who truly holds the keys to the future? Is it the software creators designing the algorithms, or is it the custom silicon builders constructing the incredibly complex, invisible hardware that makes any of it possible? Thank you so much for joining me for this explainer. Keep learning, keep questioning, and I'll see you next time.